Have you noticed that things are just so much more expensive today than they were just not too far in the distant past? And it's not just war, it's not just politics, it's not just the overall socioeconomic environment of, for me, the United States. There's a lot more going on that I want to discuss here tonight as I walk through why things are getting so expensive. Why is everything so expensive now? So this is something that impacts all of us, anybody who has a wallet, anybody who has a bank account, anybody who stores all of their cash in their mattress. All of this affects us. And again, it's not just inflation, it's not just politics, war, oil, whatever. There's a lot more going on here, and it's coming from sources that you might not actually even think about. So we're going to dive into that a little bit here to figure out why is everything so expensive. And the answer is, it's still pretty obvious. AI is making everything more expensive, but there's a lot more going on than that. Because your phone, your laptop, any kind of personal computers that you have, all of that, any technology you own, this pencil is probably going to be more expensive here soon. I've got a microphone here, this camera. Everything that we touch that has technology included is going to get more expensive because of AI. AI requires bigger chips, it requires higher processing power, it requires more water, it requires all of these different things that add more expenditures to us as things get more expensive. So the MacBook Neo came out recently, and that was a pretty affordable laptop. So it's not like a workhorse or anything, but it's a consumer line laptop from Apple. So it's pretty affordable, it does what it needs to do, it has pretty high specs, at least for a consumer MacBook would. That I think was like $699 or something like that. What we're starting to see is that even things like that, the computers like that, are going to get more and more stretched thin as things progress, because AI is making things more expensive. So those chips that they use to make the MacBook Neo are going to get more expensive. We'll talk about this in a little bit, but Apple hasn't really had to raise prices yet. First of all, they're already expensive. I know, I'm an avid Apple user, you don't have to tell me. But they already had a stockpile of everything that has been squeezed now. So they have had some time and some runway before they needed to start raising prices. But we'll see what that looks like here in the next quarter or two. The proof is in the toilet. So this doesn't seem like it's going to make a whole lot of sense because, toilets are not laptops, but I promise this will make sense soon because the people that you expect to profit from AI are profiting from AI. The first example would be OpenAI. That asterisk is there because they're not quite profitable yet. There's going to be a disclaimer at the bottom here in a moment. Anthropic is making some money. They're planning on going public in the next couple of months, or even I think this month maybe. We'll have to see. NVIDIA is making money based on their GPUs that these tech companies are using. They've blown up since AI's advent, or at least it being thrust out into the public world. Amazon, with their AWS service, and of course other business units as well, they're profiting from this. Google's profiting. Toto is a toilet maker. They make toilets and bidets. They're a Japanese company, and they are one of the leading producers of toilets. There's the note there that OpenAI is not yet profitable because Toto's stocks jumped. So we see it's a pretty decent incline up here. But then we get to this point here where there's, I think it's a 17% jump in their stock price. So that's the yellow line is Toto. So we're seeing Toto, it's following the normal trend line pretty well, and then it just spikes out of nowhere. So what's going on? The jump is connected to the 17% cost increase for your new laptop. And that doesn't really make sense because, as I said earlier, toilet does not equal laptop. So how is this intertwining? How is this overlapping? Doesn't really make a whole lot of sense when you look at it from the surface. But there is something else going on, and it's the global memory shortage that is the undercurrent of everything that is happening and why Toto's stock price is increasing as well. Let me prove it. So we see here that the memory price outlook for the first quarter of 2026 sharply upgraded. So this is from TrendForce, which tracks trends, and it's saying here that it's upgrading its outlook from what it was before to a better looking outlook for the first quarter of 2026. That's long past now, or long-ish past. It's been a couple months. But then quarter over quarter increases of all product categories to hit record highs, says TrendForce. So we're seeing here that conventional DRAM which is our consumer grade DRAM that shows up in personal computers and MacBooks and in any other kind of consumer good like your phone or this iPad pencil. I don't think this pencil has memory, but regardless, the contract prices raised to 90 to 95% quarter over quarter, and flash storage up 55 to 60% quarter over quarter. These are massive jumps. Like, that's nearly a doubling there. This is more than a 50% increase. Yes, that makes sense. Yeah, we also see SSD prices. We're not going to talk about storage a whole lot here, but SSD prices have been increasing steadily, and they're going to see a rise of up to 60% quarter over quarter last quarter. What happens? Of course, companies start raising prices, starting with Dell. Dell raises their prices to compensate. This is from an anonymous employee. The employee said Dell was also absorbing some of the costs internally. So that's good. We like to see that the company is going to own some of what it's like purchasing. So it's going to eat into its profits a little bit, but it's going to produce a better product in the long run. And that's going to happen through its hits and margins. So it's going to limit discounts that sales staff can offer. So in the long run, like just fewer discounts are going to be offered at the store or even in enterprise deals where there might have been just as an example, a 5% discount for a bulk order is now maybe a 3% discount. So just different qualities in how you can actually sell something through this. In the company's third quarter earnings call on November 25th, Jeff Clark, the COO and vice chairman, said the market's price increases were unprecedented. So I remember hearing back a long time ago, back in the days of COVID, like, do you remember all those commercials that came out where it was like in these unprecedented times and everybody said it, every commercial said it? That's kind of what we're seeing here, but this time it's not a disease, it is inflation or cost increases. It's not just inflation, I did say that, and we're going to come back to that in a minute. But these are unprecedented times. We're not used to seeing this level of disruption in the technology or even in the hardware space. Yet here we are now in second quarter of 2026 and seeing these large increases from these companies who are consuming these chips for us, the consumer, to also get. So we have not seen costs move at the rate that we've seen. Demand is way ahead of supply, and as we wade our way through that, we're going to lean on the things that we've always done. We're going to talk about supply and demand here in a minute as well, because this goes on. Selecting a laptop with 1 terabyte of storage will add to the overall cost by between $55 and $135. So again, we're talking about storage here, not necessarily RAM, but we're seeing these hardware prices increase like we've never seen them increase before in a short amount of time. And it's mentioned here, the supply and demand. The demand is just outpacing the supply by a large margin. An employee at Dell who works in sales said the percentage increase would be between 10 and 30% depending on the contract. So again, we're talking about enterprise deals here. This would trickle down to the consumer grade, not necessarily the company grade, but 10 to 30% increases on enterprise deals on contracts to be signed compared to what it was even just last quarter or 2 quarters ago. And of course, they asked to remain anonymous as they are not permitted to speak publicly. I wonder why, but Business Insider has verified their employment. And so this is from Business Insider, sourced from AOL, but whatever, it's Business Insider. So a verified employee is saying that between 10 and 30% price increases are coming to enterprise deals on the contract, regardless of the size of the order, and we're starting to see a limit in the number of discounts and the amount of discount that somebody can get. So Dell is really squeezing tight to make sure that they're still able to make ends meet with all of these different hardware increases. Lenovo hikes prices multiple times. So Dell is in the process, maybe increasing, maybe won't increase, whatever, doesn't really matter. But what we see is Lenovo is hiking prices multiple times. Let's get there in a second. Dell and Lenovo set to increase server and PC costs by as much as 15% as soon as this month, which was back in, I think, December. So this would have been for January 26, quarter 1. According to industry sources, DRAM and AI demand, so kind of the thesis of what we're talking about here, create tight market for businesses and consumers. So we talked about the enterprise side for Dell. Dell, we already discussed. Now, consumer side, this is more of Lenovo's thing. They do sell to enterprises, but here I'm thinking specifically, let me clear some of this. Lenovo has sent a letter to partners, so this is to their retail partners, warning them of price hikes on select PC and server configurations, so this would be more of the enterprise side, Coming in March, so that is 3 months ago, so that's quarter one, the end of quarter one, due to a shortage of DRAM, again, we talked about that, and our flash memory that we talked about as well. This will consequently increase costs, so costs are starting to increase more. In a February 2nd letter to partners, North America Channel Chief Wade McFarland outlined new ordering deadlines and repricing conditions that affect both the Intelligent Devices Group, which sells client devices like desktops and notebooks, the consumer side, and the Infrastructure Solutions Group, which sells servers, enterprise. So we're starting to see multiple price hikes come from Lenovo because Lenovo is going to do what Lenovo does, and that is rake in money. So they are just raking it in right now. They said its fiscal fourth quarter revenue jumped 27% to $21.6 billion. So not only did they jump up their revenue, like 27% is a significant increase in revenue, they beat the analysts' expectations of $18.7 billion. So they were already projected to have a great year. And here they just over-delivered. So its PC shipment growth outpaced the overall market by nearly 6 percentage points. Here we're starting to see that its growth in shipping out PCs beats whatever the market was actually expecting to want. And this is probably mostly because they wanted to beat the price hikes. So consumers, price-conscious consumers at least, wanted to get ahead of any price increases that might have come from Lenovo. So yes, Lenovo's raking it in. The group is also accelerating its push into the AI inference market. Of course they are, AI inference. So they're trying to break into serving the AI customer, data centers, and all of that, with its AI server order pipeline reaching $21 billion. Their pipeline is reaching $21 billion, and that was their total fourth quarter revenue from 2025. So they're projecting that within this year, the total revenue, I don't know what their deal cycle is. So their pipeline is probably 3 quarters, potentially 4 quarters. So they're expecting to make what they made the last quarter throughout the year for AI. And that is with a ramp up period. So they're not selling to AI companies now. And there is a specific thing that AI companies need that we'll talk about in just a second. Its Infrastructure Solutions Group, which includes its AI server business, posted 37% revenue growth in the fourth quarter, the fastest among Lenovo's business segments. So AI is just pumping money into Lenovo, and Lenovo is, yes, they're raking in that money. They want that money. But then they are also they are providing services to the AI companies to be able to build out their infrastructure as well. Net profit attributable to shareholders jumped almost 500%. To $521 million. Again, beating analysts' expectations by about, $250 million. So they had a very good year and a very good quarter last year. So what's happening? Well, only three companies decided to change it up. That's Samsung, SK Hynix, and Micron, whatever. These 3 companies, we can see right here, Samsung, SK Hynix, and Micron, control over 90% of global DRAM production. So that's our consumer grade RAM storage that we've been talking about. They decide what gets made on nearly every production line, because here are the little portions of the people who also play in this space. So this is all the major player in the DRAM production space. There is no one else who comes close. And this is all for 2025 and quarter 4 24. So it's not a monopoly, but it is definitely not a very competitive space. You have these 3 giants who are deciding how things get made and why things get made and when things get made. So they decide to make memory for AI data centers instead. So we want to know what's causing the RAM shortage. Here's what Northeastern Global News says. AI data centers are largely to blame for the RAM shortage, experts explain. So to accommodate the high computing demands of AI data centers, these companies have accelerated the production of high bandwidth and high capacity RAM to supply these centers. I love that this is called the IDC, because I don't care. It's a US-based market research intelligence firm. So why wouldn't they just ramp up production though? So why not just create more and more of this? Well, AI data centers need high bandwidth memory. They need what's called HBM. It's not DRAM, it's HBM, high bandwidth memory. I thought I fixed this, But HBM is special and is more complex to create than DRAM. So it's a completely different process. You need different tools. You need a different line for it. And it generates 3 to 5 times the profit compared to DRAM. So you make a ton more money just producing one chip for the for HBM compared to what you would get for a consumer grade or even just a normal grade DRAM chip. Every HBM produced displaces 3 DRAM. So the math is starting to make a little bit more sense about why we are making this switch, because you can make fewer HBM and still come out with more profit than creating 3 DRAM chips. So the economies of scale are even starting to make a little bit more sense, because you can just pump out HBM at a third of the rate of DRAM and still make a bunch of money. We see that HBM production for AI accelerators consumes approximately 3 times the wafer capacity, so chip capacity, of standard DRAM per gigabyte, according to a Micron executive, forcing memory makers to reallocate production away from consumer and enterprise products. So here we have this whole new segment, because I've been talking about DRAM for consumer and enterprise. But then this new segment comes in, the AI data center, or just AI company in general. And they need their own specific type of chip. And you cannot create that specific type of chip on the same production line as you can the DRAM that you need for consumer and enterprise products. So therein lies the issue. You can't just ramp up production. You have to have dedicated tools and dedicated lines for these things. It's mutually exclusive. So while they could ramp up production, they're going to follow where the money is, and where the money is right now is the AI data center. As a result, the supply of both traditional and legacy DRAM has decreased for industrial and PC customers, particularly those with lower volume requirements. So it's a volume play, it's a scale play. They want to make as much money using as little real estate as possible. And honestly, it's good business decision. Like, you go where the money is. You go where the segment you can serve the best is. And for them right now, for Samsung, SK Hynix, and Micron, the money right now is that AI segment, the AI data centers, because they're the ones who are going to pay the bills. And it's supply versus demand. That's what it all boils down to. Prices go up as supply goes down, and demand goes up or remains steady. So we have our supply and demand curve. I talked about this last week as well. So we've got supply, demand. So demand is continuing to increase, and supply is increasing at a much slower pace. So we see our supply is increasing eventually, so production is increasing, but demand, first of all, starts higher and continues to progress at a steady clip, or even at a faster clip, because as prices start to increase, people are trying to get in before things increase too much and they can't afford it anymore. So that means here we have price point. So this is where people are going to price it. So here we've got our supply curve, we've got our demand curve. And so back earlier, not too long ago, we had a nice big supply of chips. So DRAM is good, then our demand, we'll draw a similar curve. Like, yeah, it's going to increase over time because people need more powerful stuff. More companies are entering the field, etc. More enterprises are being developed. So that means that our price point is lower, though, because price goes higher this way. So money up, money down. So this means here that supply is high, demand is moderate, and steadily increasing. So price is going to be at a moderate, lower price. But when demand is high and supply is low, then we see that the price point increases. That's just how economics works. And it's not by accident. So they're not just, throwing chips out into the air and hoping for the best. And it's not against their will either. We talked about supply and demand. They're trying to make money, and it's good business to make money. So don't get me wrong there. But SK Hynix is simply choosing the higher margins. They're getting 72% more operating margin in 26 quarter one, so last quarter, and over 200% year-over-year revenue growth. They are exploding. Their revenue, their profits are ballooning. They're making so much money right now, similar to how NVIDIA made a ton of money at the advent of consumer-grade AI. So it's been wild overall. Even the non-specialized DRAM memory is affected because Samsung and SK Hynix have committed 900,000 units per month to OpenAI, to one company. 900,000 units that could go into consumer or enterprise grade. And yes, we're talking about DRAM here. So this is not the HBM chips. This is DRAM that is being sent directly to OpenAI to power their LLM and their AI systems. So that takes that takes supply out of the marketplace while demand is still very high for that consumer and for that enterprise grade stuff. So now this new segment, AI, coming on the scene, and people are doing everything they can to make as much money as they can off of it. And so that's 900,000 units, as I said, not sent to consumer devices. Your phone, your computer, my camera. My microphone doesn't have memory, but my iPad, things that are technological and have an impact on our everyday life are all impacted by this decision. So this is from IDC.com, which we just talked about, that source here a little bit earlier. This is a zero-sum game. There has to be a winner. It is a finite source. Every wafer allocated to an HBM stack, that's that high bandwidth that we talked about, for an NVIDIA GPU is a wafer chip denied to the module of a mid-range smartphone, which is what I've been talking about, or the SSD of a consumer laptop. So again, storage is going to increase because supply is going to decrease. Smartphone prices are going to increase because supply has decreased. It's simple math at this point. As a result, the IDC expects 2026 DRAM and flash storage supply growth to be below historical norms at 16% year on year and 17% year on year, respectively. So not only are we seeing a shortage in all of these different chips and flash storage and everything that we need, we're seeing a slower increase in supply being added into the market year over year. So we're seeing more demand, less supply, and less capability to produce that supply. Micron actually exited the consumer business altogether. They saw this AI segment and they said, I am going to do everything in my power to make so much money on OpenAI and Anthropic that I don't even want to serve the consumer anymore. There's no point in serving the consumer anymore. Why would I do that when OpenAI and Anthropic are printing money and sending it to me hand over fist? Like, it just doesn't make sense to spend all this money and effort into the consumer segment when I could just do this for someone else. And so that's what they do. They announced their exit from their, they called it Crucial. It's the consumer business for Micron. Apparently it wasn't that crucial when they can just abandon it like that. They did continue through the end of their fiscal quarter, quarter two, which is February of this year. But this was announced in December of 2025. And I'm sure there were a few other, there was a long path to get to this point, maybe. But they exited the consumer business in 2 months, January and February. That's all it took, and was 1 quarter to get out of the consumer business. So again, was it really that crucial? Maybe not. They made the announcement to exit the Crucial consumer business, including the sale of Crucial consumer branded products at key retailers, e-commerce shops, and distributors worldwide. They'll continue their consumer product shipments through consumer channel until the end of fiscal quarter 2026, that's February, and will work closely with partners and customers through this transition and provide continued warranty. Okay, that's good. I didn't actually know that. They will continue to provide warranty service and support for Crucial products. They exit out the consumer business altogether, and they're only supporting enterprise and AI, and they may actually combine AI and enterprise in the same segment. This shortage is intentional and structural. It is not seasonal. It is not cyclical. So, sometimes prices increase, then they decrease, and then they increase. This would be a seasonal curve. What we're seeing is that prices were, steady, and then they just started to go up, and then they just continued to go up. It's definitely intentional. So we're starting to see that the shortage is really starting to squeeze these companies. And we're starting to see it just because the 3 companies choose to serve AI customers over consumer electronics because the money is better. This is the whole crux of the issue, is that these 3 companies, Samsung, SK Hynix, and Micron, all decided to serve AI customers over the consumer segment. And now we're hearing the squeeze from consumer tech CEOs. Who better than Tim Cook, Mr. Apple himself? So this was from a financial call, so it's a transcript of a financial call, and he's going to walk us through the chronology. I'm not going to read all of this, but there was a minimal impact in December on the memory, and that's reflected in their gross margin results. So again, I mentioned this earlier, they had a stockpile of what they needed to make sure that they could not adjust prices going into Q1, essentially. It would be a bit more in March, they said, so the surplus is starting to run out, and they did see higher memory costs in March as well, so in their March quarter, which for most people would be the start of Q2. So now for the start of Q3, they are seeing significantly higher memory costs. So this is now Tim Cook, CEO of Apple for now, is talking about how much higher memory costs have gotten and how they are impacting not only their prices, but also their outlook. So they're looking and seeing that they can't even give color beyond June because they just don't know what the memory shortage is going to look like. But they do believe that memory costs will drive an increasing impact on our business. Translation, they're going to have to raise prices in order to continue making the same amount of money on the same amount of product. They'll continue to evaluate it, and they'll look at a range of options. Andy Jassy, I think that's how you say his name, from Amazon. So Amazon also facing a memory undersupply. It's an issue facing many tech industries. We just talked about Apple. We'll talk about another after this. He said that everyone knows that the cost of components, particularly memory, our RAM, has skyrocketed. It has gone up to the moon. I can't draw. This is a rocket. It is going up there to the moon, and they're laughing to the bank, honestly. So we see that this has been skyrocketing, and they're at a stage where there's just not enough capacity for the amount of demand. It goes back to that supply and demand curve that we've been talking about. As supply increases and demand stays the same, price is going to increase because it can. Then we have Microsoft and Meta. Bless them. They are projecting and spending, they projected $190 billion in capital expenditures for 2026, which is up 61% from last year. That is a significant increase in capital expenditure. So they are investing in their business, but they had to call up the money in order to actually spend it. So they anticipate $25 billion impact from higher component prices. Specifically memory. Meta noted that expectations for higher component pricing contributed to its CapEx forecast increasing from a high of $135 billion to as much as just $10 billion more. No big deal, $10 billion, whatever, that's child's play in this day and age. Across the tech landscape, executives have been voicing their concerns about soaring prices for memory. Again, commercial DRAM memory for our smartphones, our computers, the stuff that we use every day. And this is facing a crunch due to insatiable demand for artificial intelligence infrastructure. Again, those data centers from Amazon and OpenAI and Anthropic and all of this different AI infrastructure that is just sucking out all of the supply of these chips. Noting that they need a different type of chip, the HBM instead of DRAM. So they're disrupting not only the amount of supply out there, but the production pipeline for this necessary memory. So it's getting crazy. Each generation of NVIDIA chip, the processor at the heart of the AI boom, yes, NVIDIA is making so much money. They pack in more memory, further constricting an already stressed market. So exactly what I said, they've disrupted the production pipeline of these chips that are so necessary. These companies are spending hundreds of billions of dollars on AI infrastructure. They're driving up the price of memory in the process, and the cost of that price increase is passed on to the consumers. It is not necessarily, Dell is somewhat of an exception, but they are not paying for this extra AI juice. We are. So when our DRAM prices increase, first of all, for those who build their own PCs or their own hardware in general, like you're already feeling the squeeze of hardware prices. Like that's not new. When we get down to it and now Apple is buying DRAM at a higher price than it was before, they're not going to keep eating into their margins in order for us to benefit the consumer. They still need to make money. They still need to make their shareholders happy. So they're going to increase their prices to make up the difference between what DRAM cost a year ago and what it costs now. The same is true for Microsoft. The same is true for Dell and for Lenovo and all of these other companies that produce the high quality technological goods that we rely on, but they're not saints. They're not going to just go out of business so I can have the new iPhone 25.6 Plus. Like, that's just not how business works. They need to also turn their profit. But to make that point a little bit more clear, the AI companies aren't paying the memory tax. We are. Now, I mentioned a toilet company earlier. What about them? Like, how do they tie into all of this? Was that just clickbait? No. Toto makes these things. So these are called electrostatic chucks, or e-chucks. They're about the size of a steering wheel, and they happen to be the best thing to hold silicon wafers flat during chip fabrication. So they're ceramic plates. Toilet company uses ceramic, and they make these plates that then can hold all of the production line together while the chips are being fabricated. As different layers are stacked on, this allows them to be held perfectly flat and not be disturbed during fabrication. And it turns out that the expertise needed to make the perfect toilet is the same expertise that makes a contamination-free wafer chuck. Very interesting how all this ties together. Profits are up, so expansion is coming for Toto as well. AI infrastructure has gotten so ridiculous that it's pulling in companies from unrelated industries. So everything's getting ridiculous, and now toilet companies are being pulled in for whatever reason. The shortage probably won't last forever as production lines expand, so that's exciting. But until then, consumers will end up paying the AI tax, and who knows what the next tax will end up being. The AI boom has a cost, and we're already paying it. So we're starting to see all of these price increases from, like I mentioned, the hardware price increases. We will soon start to see increases in all of our technology that uses RAM or storage because things are just not being produced as quickly. So Apple devices will likely get more expensive. Sub $500 PCs may not exist by 2028. And companies are spending so much money on infrastructure and just rolling the costs into their products. It's smart business, I will say that, but it does hurt the wallet. And so that's all for that. That's all the slides I have. But let's talk about this a little bit more, because Toto has now been roped into this whole AI infrastructure talk. And I'm sure they were not expecting that at all. They have now a line item in their budget for AI infrastructure because they are contributing to the ability to fabricate the chips needed to power these data centers, which is just crazy to think about that. And it's not just Toto. Other toilet companies or other ceramic companies are also being brought into it. Now, toilets, bidets, all of that, they don't have memory, so it's not like Toto is consuming the or consuming the chips necessary to be sent out into the market. They are just part now of a supply chain touching way much more than it should be responsible for. So for now, we see that ceramic is a big part of the AI production pipeline. That may change how toilet manufacturers make toilets, and that may increase the cost of toilets. As I mentioned, we don't know what the next AI tax is going to be. Right now, it's technology. It could be that ceramic later on as production scales or gets weird or whatever. It could be some unknown thing. We could see copper or some other precious metal, for example, get pulled into the production lines as well, and there be a shortage of that. Or we can't produce enough of it, or we can't process enough of it. And then that affects things like rings. It affects even more like gold and platinum and stuff like that. Even sapphires in our phones now. All of these different precious materials that are more finite are all rolled into the AI data center pipeline, supply chain. So it gets really interesting the more we dig into this, but I think this is a good place to stop because I'm tired of talking about toilets and RAM. So hopefully you found this video helpful or interesting. If you did, please like it, share it, subscribe to my channel for more content like this. I do have a course out called Payload Essentials that will be covering a modern content management system, or CMS, and Next.js, which is a front-end React language. If that's all gibberish to you, look it up. Maybe you'll be interested in my course, Payload Essentials. That link is in the description. I also have a newsletter for web developers. If you want to stay up to date on everything that's happening in the web development world, feel free to check out that newsletter. Again, link is in the description. Otherwise, you can just follow me on X, subscribe to this channel, like this video, share it, and help me get some more sanity about why I'm spending so much money on computer components. But what do you think about all of this? Are you spending way too much money on computer components? What's going to be the next AI tax? Is this all just ridiculous nonsense? Let me know in the comments, but until then, I will see you in the next video.